There are several ways to trade Chinese stocks. These two ways are the most common, basic, and effective. 1. IBS, also called the inside bar structure. 2. Wait for a huge resistance to break out from. Let's take a look at the first Chinese ticker, NCI, which made a huge move Wednesday. After it made such a big move with such big volume, we knew to keep our eyes on it. The next day, it had relatively less volume compared to the first day. If you didn't watch our video about the inside bar structure a few weeks back, these are the requirements a stock has to meet before you can call it an inside bar structure. 1. A really strong first day candle with a lot of volume. This candle will be called the mother bar. 2. A second day candle inside the mother bar. So the high must be lower than the high of the mother bar, and the low must be higher than the low of the mother bar. The inside bar must also have lower volume than the mother bar. NCI completes these two requirements. The last part is where you enter on day 3. You have to wait for the price to break the high of the inside bar. Once it breaks it, you get in. In this case, you could have entered already in pre-market, but we waited for market open because it broke at pre-market only with really low volume. Once we got in at market open, it went up for a nice 30+% move. After this move, it even came back to $2.45, the breakout zone, which has now become support. This means you could get back in again to make some nice scalps. In this case, these scalps from the new form support zone are good for a nice 10%, 8%, and even a 30+% in after hours. If you think these moves are too risky, you can use only profits from the first trade, so you can impossibly lose money. The second Chinese ticker is FGL. This one got a really big fast move with halts on Friday, so fast it was too risky to play. But this means there are eyes on this ticker, so we take a look at its daily chart. When we zoom in, we see a huge resistance zone formed in the last weeks, from $17.25 to $18.57. It has tested this zone almost 10 times, but it has never broken it. So when you go back to the 1-minute chart, you see it exploded above this zone. So all we have to do now is wait for it to come back to this zone for a nice risk-to-reward entry. Because we set our stop loss below this zone, we only risk a few percent. Once it came back in the zone, we got in and sold for a nice and easy 40%. Do you see how easy Chinese stocks can be? Many people try to scare you of them, but they can make some really nice moves. You don't have to believe in the company, just believe in the chart. The last ticker we want to take a look at is RIME. This isn't a Chinese ticker, but it was too crazy to not include in the video. It made an interesting move with big volume Thursday, but started rejecting the same zone multiple times after. 1, 2, 3, 4, 5, 6, 7, 8 times. The more times a zone rejects, the stronger it is. This also means that once it breaks the zone, a huge move can happen. Now all you need to do is wait for the zone to break and get in. You see, once it broke the zone, it never looked back and made a crazy move for almost 300%. And all you needed to do is recognize and draw the resistance zone and wait for it to break. Easy, right? For now, I hope you learned something, and I hope this video helped you further in your trading career. See you hopefully next time. Bye!